Hello and welcome to Getting Your Money's Worth. I'm Judith West, host, and this is the show that focuses on value. Our guest today is Frazer Rice, Vice President of Wilmington Trust Company. Hi, thanks for being on the show, Frazer.
It's great to be here.
Okay, so you're a banker.
I'm a banker.
Tell me, do you walk around with bodyguards these days?
It can be a tough job. I'm also a reformed lawyer, so I have two strikes
against me. Oh, wow, you have
me.
two strikes against you. The only thing missing is used car salesman.
Well, sometimes it feels like that.
And then you go into hiding. How is it that what used to be such a revered profession has tumbled so fast?
I think a lot of it, I think there's been a little bit of a public trust that's been broken. I think the news stories that go out where you have large institutions that have dealt in a lot of areas that are close to home for people, like mortgages and loans and things like that, where people, the rank and file and people across the country have really suffered. They pin the blame on that, in a lot of cases rightfully so, on financial institutions. And so the people who work for those institutions, they feel the brunt of that, and there's a lot of anger out there that we have to deal with.
So there's anger on the outside and anger on the inside.
Well, I think certainly on the inside, people who work for institutions, they look around and say, if they didn't understand the products they were getting into and feel like they were let go for reasons not of their own doing, those types of folks, they've been hurt by it, and so they direct their anger toward the institutions as well.
Right. This business that we're hearing a lot of, that we read a lot about, too big to fail.
Mm-hmm.
You know, it used to be that there were nice regional banks when you went in and people knew who you were, the friendly banker. Is that a model that ought to come back?
I think we're on our way there in some ways.
Really?
I think if you look at the regulatory environment and what the federal government is looking at in terms of proposals, I think there's going to be a real emphasis on getting back to more manageable, and I put that in quotes, manageable institutions that where the liability of their going down or otherwise failing has less of a systemic risk. I think, too, the concept of service is going to come back, and I think people who know their banker, who know their relationship manager or lender, I think people are going to value that more and more as opposed to signing on with a larger institution that's a little more faceless in the way they approach their clients.
You know, for lots of folks, Frazer, their banker just is the teller behind a window.
If you even get a teller.
If you even get a teller.
I think that I think people are becoming more and more sophisticated, down to everyone who has their own checking account and so on. I think people are going to demand more service. I think the institutions, the ones that ignore that, do so at their own peril. I think service continues to be something that if you don't take pride in it, people are going to move. And certainly we're at a weird time right now where interest rates are so low that people bouncing around looking for the best rate, they're not going to do it if it's that difficult to move accounts or otherwise get in touch with people.
Tell me, I don't know, I feel like maybe the ATM machines had something to do with this, and all of a sudden there was a disconnect between the bank and the consumer. All you had to do is go to a machine and put it in and get some money out.
Well, absolutely. I mean, ATM machines are part of the convenience lifeblood of this country now, and I think people, you couldn't live without them. It's like living without a cell phone. But I think part of the dynamic there was that ATM machines are a lot less expensive than actual staff. And so the banks started to look at that and said, well, people want the added convenience, and they don't necessarily need a teller behind the window anymore. And so you start trimming costs that way.
Let's move on. You've been in this for a while, mm-hmm. and you're also a person who has spent some time in politics. This business of government regulation and getting this side and that side making up their mind to do it, do most Americans, they feel that they don't know whether they should be happy about government regulation or not happy. If government gets in, that may mess it up. But after all, who is going to have oversight and watch what people are doing to curb some of this greed? Give us the scoop on government regulation.
Well, you covered a lot of subjects there.
I know. We only have 12 minutes.
No, Frazer. I know. I think it comes down to where does it hit the American public the hardest. And I think by and large, most people, their largest asset that they own is their home. And so ground zero for that type of analysis starts with whether people are able to get loans to buy houses, to refinance mortgages, and the like.
And maybe for small businessmen to keep their business.
Right there.
That's there.
That's the same thing. I think
Right.
the people who own their own businesses, I think that's step two. People who need to get credit in order to grow their business, in order to hire people, in order to get more customers, the ability to get in there and talk to your bank, that's a key component of it. And I think regulation, regulation is all about politics in a lot of ways, and politicians are driven by getting votes. And so when you get votes by keeping the most people happy, and so I think regulation is going to really cant toward the side of helping people get credit where they need to, helping small businesses get the credits they need.
Can we depend on government to know how to do that? After all, we had how many months ago do we have a stimulus bill, which is supposed to make it easier for people to get loans? And I hear over and over again, or to borrow money, the same stories. Very few folks have had their mortgages rewritten. Very few small businessmen can get a credit line to keep their businesses going. It doesn't seem as though there's much that has happened as a result of all that money.
I think you've hit the nail on the head there. I think where you have a real intersection between politics and business, you get some real difficulties. I think politicians and government in general is going to be a step behind the markets in terms of what interest rates look like, what banks are willing to extend in terms of credit, what sort of risks they're willing to take. And so it takes a real, I guess I'd say, enlightened government to be able to try to predict where things are going to go and to put in an environment which helps move things along.
But what we've seen, though, of late, not talking about any administration, I'm
Sure.
using broad brush, even your enlightened government almost sounds oxymoronic.
You could really be onto something there. I think it's very difficult. We're asking our leaders to really synthesize a lot of very complicated issues, and I think they're doing it from a base that's a couple of levels of abstraction away from their own expertise and experience.
It's kind of up there someplace on the planet, but it's not right there in the guy's pocket.
No question about it. And it's a difficult chore for government, but that doesn't mean that they shouldn't be a little more proactive and get more expertise around.
So what are we? Where are we going with this? You're the kind of person that this country needs in terms of your own expertise, both in law and in banking, and you have an academic background. Many folks thought that by now the R word would be behind us.
Well, I think from my perspective, the best I can do is, number one, remain involved publicly in terms of being able to go out and talk to people generally and alert them to the issues. I think people who know what's going on and know what can affect them are more forceful advocates for themselves. And we want to get involved in a situation where people are self-reliant.
Right.
And then as it relates to business, I approach things one client at a time, and I go and I try to educate them on what's out there.
Your clients are typically not this. Are they typically the folks that are worried about their mortgages and getting cash flow for their businesses?
They certainly can be. I deal with high net worth clients, so the issues can be a little bit different from sort of the American middle class and so on. But the same types of things apply. People borrow money to grow businesses. People borrow money to buy houses. And
that has always been very good for this country.
Oh, absolutely. I think any time you get private enterprise involved, I think you're getting people to be self-reliant.
So is there a way to approach a bank? Is there a way for folks to help themselves out, to try to make the situation that they are dealing with better for themselves?
I think when I tell people when I'm advising them on certain situations that, whether they involve my bank or somebody else's, I think, number one, the best thing you can do is take a lot of time to understand what your current situation is.
Okay.
As it relates to how I deal with clients, I like to understand what they have in terms of assets, what sort of income needs they require in order to pay their mortgage or take care of their business or fund their kids' educations and the like. A lot of times some people only have a vague notion of what that is. And
so actually a balance sheet.
A balance sheet is a great way to do it. I mean, it keeps it organized, and it's a standard way to look at things that I can look at and make some sense out of, and that I can translate to the expertise that I have at my disposal. Also, if you come into a bank with something like that, it shows that you're somebody who is a worthy borrower. Absolutely. I think if you're speaking the language that the banks understand, it shows that you've done your own homework. And so it adds a little bit to your credibility as a client or a potential client when you go in and start talking their language, and then when you go and make a request and look to get loans and the like, they take you more seriously. And when you're more credible, they're more willing to extend.
Okay, so have a good understanding of your assets and your liabilities and what your goals are.
Sure, absolutely. I think knowing where you want to be is important, because it's like having a business plan for a business. If you walk in and don't understand where you want to be 1 year, 5 years, 10 years from now, you can't expect the bank to step in and know that for you.
Exactly. And I'm sure you know this, but this show, we speak to folks all the time. It is amazing how few people even know what they owe or what they have, or even have a sense of where they'd like to be 5 years from now. This is not a well-developed concept in this country. I think
in general, the broad notion of context of what numbers mean a lot of times is lost on a lot of people in this country. I think, I like to point to the fact that an interesting concept is the power of compounding. And a lot of students get credit cards nowadays, and they order a pizza on it, and suddenly they're paying $48 to $50 for that pizza if they haven't kept up with their interest payments.
Exactly, right.
Those types of concepts, those are things you really need to drill into people early, and that's a more informed
By
public.
the way, picking up on that, I think we've just had some credit card legislation where these credit card companies, lenders, have to stay so many feet away from college campuses.
No, it's like
it's like ballot boxes or something.
It's like liquor stores next to churches and things like that. You want to be careful.
Okay, so that's a good point. Next point. That's a good tip for people to get themselves organized to get credit.
I think, first of all, again, having
knowing what you have, having a plan, having a goal.
Having a goal, and then having your paperwork ready, I think, is a lot.
That's a good point, too.
It seems a lot of times people go in expecting people to just hand out money a lot of times. I think having your paperwork set up so that you understand what you're signing on to, what your legal responsibilities are, what your commitments are really going forward. I think that's
having a good listing.
That it just shows organization of thought and a real track record. It demonstrates a track record, and it demonstrates a real plan going forward.
And after all, there is nothing wrong with a lender looking into the worthiness of the potential borrower. That's kind of how we got in trouble in the first place. Is that people?
It seems like a quaint concept.
Yeah, I know.
It
seems so. Ellen, we're talking about this like it's so revolutionary.
Right.
But after all, wasn't that the way it always was? You had to prove that you deserved to borrow the money.
I think in a lot of ways you're right, and I think when you look at the example where people didn't have to put money down in order to get mortgages and so on.
They didn't even have to have earnings documentation.
Right, and I think that's just, you get to the point of distortion at that point where people who really shouldn't be borrowing were getting credit and didn't understand the ramifications of what they were doing, and then voila, 3 or 4 years down the pike, they're surprised when things have turned upside down, and if they didn't have experience in the markets and expected real estate to go up, suddenly they find themselves underwater.
They forgot the trees don't go to the sky.
Well, and that's bad too on the bank's part, because in some ways
certainly the banks had some role in getting us into this.
No question about it. I think.
Okay, we are out of time.
No.
But I have to tell you, thanks for being on. I appreciate it very much. And you're kind of like the guy that used to be the very helpful, friendly banker.
Right. Thank you very much.
Thanks for being on the show.
Appreciate it.
I'm Judith West. You're watching Getting Your Money's Worth, the show that focuses on value. Thanks for watching.